Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, the equity markets have had a very strong year to date. I know we're having a little pullback, which is normal this time of year. July, August, September tend to be weaker. Totally normal again that we're having this pullback. But I wonder where most people's head is in terms of the percentage of total equities they have in their portfolio. So the equity markets have been good. The question I have is, do you now own too much equities as a percentage of your portfolio? We're going to jump in and explore. And I wanted to share some data by a gentleman by the name of David Rosenberg, the founder of Rosenberg Research. Here is Mr. Rosenberg, and he shared some interesting points, and this is quite alarming, at least according to him. And he says that equities now account for more than 70% of the U.S. household balance sheet. Why? Of course, that's because the stock market has really run up the last some years. And he goes on to say, quote, for the retiring baby boomer community, over 60% of their assets is in equities, which is double where it should be at this stage in the life cycle. Now, you might say, okay, if it's over 60%, the current allocation, where should it be? And really, here's some generic things to look at. It really depends on your risk tolerance and really where you are in your life. But the bottom line is, here's some generic allocation recommendations. If you have a moderate risk tolerance, you should have around 60% of your portfolio in stocks or equities. If you have a conservative risk tolerance, you should have roughly 20% of your portfolio in equities. This is a generic allocation guide just to give you an idea of what you might consider in terms of your overall allocation, again, depending on your risk tolerance. So Mr. Rosenberg goes on to say his greatest worry is, quote, how nobody has rebalanced their portfolio in this stage of the run. It's as if diversification is a dirty 15-letter word. And this is why he says the next bear market, meaning the next big downturn, is going to carry with it a retirement crisis of epic proportions. Now, here is the question I have for you. What percentage of your portfolio is now in equities? And is this consistent with your risk tolerance? Again, folks, things have been good. The markets have been good. You'll see your statements over the last year and a half, and you're probably feeling pretty good. But this is the time where you need to reevaluate your portfolio to determine, number one, is your overall portfolio, maybe it has too much equities, but is it consistent with your risk tolerance? Assume that you do know what your risk tolerance is. Now, of course, I want to remind you, there's a few things you need to have and focus on, in my opinion. Number one, clarity on what your goals are, meaning if you're nearing retirement, what does that time frame look like? Are you on track? Are you off track? If that is something that is important to you, as an example. So clarity on your goals. The second thing is your risk tolerance. I mentioned it a few times today. What is your risk tolerance on a scale of 1 to 10? 1 as an example is money like in a savings account, and 10 as an example, money in a high-flying technology fund or a very aggressive strategy. Where are you on the risk scale? And number 3 here, your family index number. That is the rate of return that you need to earn now and in the future to live your ideal financial life, retirement life, and essentially have the life you want. 3 things: goals, your risk tolerance, and of course your family index number. You get clarity on these 3 things, put an action plan together, and I think you'll very likely have success over the long term. So again, do you have too much equities? It might make sense to have that reevaluated. If you've found value in this video, if you're seeing it on social media like Facebook or LinkedIn, go ahead and share it. Or if you get it in an email, go ahead and forward it to a friend. And if you would like a second opinion on your portfolio or financial situation, here's our website at nickelswealth.com. Go on our website, click on the Request an Appointment tab, fill out the information, and one of our advisors will reach out to you and give you a second opinion. And we can do an analysis to determine what percentage of equities is in your portfolio and if that makes sense for you based on your goals. Thanks again for watching. Bye-bye.